Good morning, ladies and gentlemen. And we're just going to wait a few minutes because I see that there's still quite a few participants that are entering into the meeting still. Morning, ladies and gentlemen. I think we'll start now. If anybody joins in, they can just join us as we go along. I just want to welcome everybody to our second lockdown webinar that's been hosted by myself, Farida Lavangee. Just to introduce myself, I am a director at Turning Point Chartered Accountants. And today I'm going to be focusing on some of the new relief measures as well as amendments that has come about from SARS, basically since our last webinar, which was held on the 24th of April, 2020. A few admin issues before we actually get into the actual webinar. Just in terms of your voice and video, I have muted everybody, but if you could just make sure that your video is off and your voice is also off, just so that it's just me talking through the webinar. And then we will be taking questions at the end. Well, I'll be answering questions at the end of the presentation. You can post your questions on the chat function. Okay, so I'm just going to go back to go to my slides. But before I do that, you guys will all see that I've got a video that's rolling on my screen. We're basically launching our new CA Connect package, which are packages that are tailor-made for the NPO sector. You'll see that we've got basically two plans, an essential plan and a premium plan. And we're running a special offer. If you sign up between now and the 30th of June 2020, you'll qualify for 1 month free, so no charge for 1 month. And we'll also do a free COVID-19 relief consultation for your organization. So if you want a bit more information on that, you can always just email me. My contact details will be at the end of the presentation as well. Okay, so I'm going to stop sharing the screen and now we're going to go on to our slides. Okay, so like I said, this is our second webinar that I've been hosting on since we've gone into lockdown. We're covering the latest amendments for COVID-19 relief. And we start. Okay, so this, in terms of what we're covering today, we'll be looking at the SARS amendments that have come through since our last webinar. And we'll be covering as well the new relief measures that has also come about. And there's a lot of confusion as to what needs to be done and what's actually happening on a practical basis. So we're going to go through some practical guidance covering some of the tools that we found helpful when working with some of these relief measures, as well as tips that you need to be aware of when you are dealing with any of these amendments or the measures that are out there for your organizations. And then we'll just talk about a little bit about our firm, and then we'll take questions as per normal. Okay, so if we're going on, has changed since our last presentation. We all know that ETI has come about. Well, ETI has been around since 2014, and it was basically a mechanism which allowed an employer to reduce their employee tax on a monthly basis. So what has changed since our last webinar is that initially SARS introduced an increase in the maximum amount of ETI that could be claimed, and they've now further increased the maximum amount of the ETI that can be claimed by an organization for the period 1 April 2020 to the 31st of July 2020. And what they've done now is for the first 12 months, the maximum amount that can be claimed is now 1,750 as opposed to 1,500, which was initially proposed by SARS. The second amendment that they've made with regard to ETI is that during the second 12 months, the maximum amount that can be claimed is now 1,250 as opposed to 1,000 Rand, which was initially proposed by SARS. Right, so big amendment here is just that there's an increase in the maximum amounts that you can claim. Just a reminder of the amounts. We've now got 1,750 is the maximum for the first 12 months. And for the second 12 months, your maximum is now 1,250. In terms of the ETI claim that SARS allowed for those people between the ages of 30 and 65, and those individuals that were between 18 and 29, whose 24 months had already been claimed for, they now increased that to 750 Rand as opposed to 500 Rand, which was during the previous information that SARS had released during April. So just to summarize for ETI, your first 12 months now 1,750, your second 12 months is now 1,250, and your ETI claim for those people that who are over 30, between 30 and 65, and those who are between 18 and 29 and you claimed, it's now 750 Rand. Okay, so that was the ETI amendments that have come through. Just gonna go to the next slide. Okay, just some practical considerations for you to consider in terms of ETI. Number one, are you fully tax compliant? So we did cover in the last webinar what it means to be fully tax compliant. And I'll just recap some of it. The first thing is obviously you must be, the person's salary or the individual salary must be below 6,500 Rand. They must be a South African. You must obviously be registered as an employer with SARS, and you must have submitted all your returns to SARS and have no debt outstanding to SARS. So that means fully tax compliant. So the other thing to remember is that when you're doing your EMP 201, if you are not fully tax compliant, the ETI blocks won't be available to you. It will be grayed out. So you will know automatically whether you are compliant or not. Other things to consider is just in terms of your payroll software, has it been updated to perform the calculation based on the latest SARS guidance? I can tell you from experience, during April 2020, VIP had issued their update, and that was based on the ETI where the maximum was set at 1,500 for the first 12 months and not 1,750. And we were submitting clients EMP 201s and our own EMP 201, and this guidance to increase the maximums came out. After that, VIP's comment was because it hadn't been passed as a bill as yet, then they couldn't release the update. So obviously you now have to make sure that for your May payroll run, that your software now has the latest guidelines in there. And another practical consideration is what happens to April 2020, because if you claimed using the previous guidance issued by SARS, that means you potentially would have underclaimed some of the ETI. So our advice is just to process the underclaim in your next EMP 201. So if we're looking at in your May EMP 201, you will have to now account for that underclaim that you processed in April. Okay. The next amendment that came through was PAYE deferral. Okay, so the PAYE deferral was there previously. SARS has just made certain changes to it. They've said well, I'm just going to first cover what is the deferral, and then we'll go through what the amendments were. That's purely because in our last webinar, we didn't cover PAYE deferral. So the deferral is, SARS is saying that a qualifying taxpayer can defer 35% of their PAYE payment for the period April to July 2020. The amount that is deferred is repaid in 6 equal installments, and the first installment is due by the 7th of September 2020, and the last installment will be made by the 7th of Feb 2021. And SARS won't levy any interest and penalties for qualifying taxpayers utilizing the deferral. So basically, you can save some money and pay SARS less of the PAYE for the next 6 months. Sorry, for the period April to July 2020. And if we go to the next slide. Okay. So who qualifies for this deferral? So the Tax Act basically specifies that a qualifying taxpayer is a trust, company, or partnership that conducts a trade. So very important, I've highlighted trade in bold, in red. We're going to touch on that in a few minutes. The other requirements is that you must have a gross income of 100 million Rand or less for the year of assessment ending on or after 1 April 2020, but before the 1st of April 2021. Okay. Your gross income does not include more than 20% in aggregate of interest, dividends, foreign dividends, royalties, rental from letting of fixed property, annuities, and any remuneration received from employment. Okay, and you must be fully tax compliant. So what has been amended? A qualifying taxpayer can now claim, well, can defer 35%. Previously, during April, when the deferral measure was initially released, SARS had said that it was 20% that you could defer, so it's now 35%. And the gross income has increased from 50 million to 100 million. The other change that they made is that your gross income must not include more than 20%. Previously, it was 10%. So all these other forms of income, it's now basically increased that from 10% to 20%. Now, the question you must be asking yourself is, do you qualify for this deferral? Because obviously, employee cost is generally a big, it's a big expense for most organizations. So your PAYE cost is generally a large expense. In terms of whether you will qualify for the deferral if you are a nonprofit, the question is whether you conduct a trade. So if you do not conduct a trade, then you won't qualify for this deferral. Most nonprofits receive their income in the form of donations and grants, which SARS does not constitute to be a trade. So if you are only getting grant income and donation income, then unfortunately you won't be able to claim the PAYE deferral, and you will have to continue as per normal and make your payments on time to SARS. We as a firm, we have made submissions to SARS and National Treasury on this matter. However, the draft bill hasn't been amended as yet to include NPOs, and we will obviously continue to follow up on this matter because we deal in the sector. So we know that this is one way where you can actually save some money if you could qualify for the deferral. Other practical considerations with the PAYE deferral. So for those of you who do conduct a trade and qualify, Number one is ensure that you're only claiming if you meet the definition of a qualifying taxpayer. So when this relief measure was initially released, a lot of people missed the whole point that you needed to be conducting a trade, and people were claiming the deferral. So it's very important to ensure that you only claim it if you meet the definition of the qualifying taxpayer. Check your tax compliance status prior to making a deferred payment to avoid any interest and penalties, because it will allow you to make a reduced payment even if you are not fully tax compliant, but then SARS will still levy the interest and penalties. So maybe try running a tax clearance on the SARS e-filing site prior to making any deferred payments. Then another practical consideration is that the deferral is not actually shown on the EMP 201. So you will complete your EMP 201 as per normal. So you will declare your PAYE or UIF. We'll talk about SDL just now. And whatever ETI you're going to claim, you're going to declare that. And your EMP 201 will show the full tax that is payable for the month to SARS. So you will submit it as per normal. What you would need to do is, if you do qualify for the PAYE deferral, then you need to maintain a schedule for yourself, basically showing that each month, and you do the calculation. This will just ensure that you don't make any mistakes when you're making your payments and when you start doing your monthly installments to SARS. Second thing is to run a PAYE statement of account each month to ensure that interest and penalties haven't been levied by SARS. The statement of account will actually show the 35% relief that's been set off against the total liability. I'm going to show you now, I think it's in a bit, just a slide showing how the COVID-19 relief is shown on the EMP-SA. Okay, so if we look at it, this is just a statement of account. You'll see it's got the declaration, which is the full declaration for the month. Then the ETI is shown, and then there's the COVID-19 tax relief, which is basically the deferral for this month. And there's the payment that we've made for the month. And then you'll see that obviously the account is sitting at 0. So it's showing that for this period, you don't actually owe SARS anything. So just important considerations to keep in mind is, the first one I mentioned was make sure you're only doing the deferral if you actually qualify. Okay, if you are making the payment via e-filing using the Pay Now option, another important thing to keep in mind is that defaults to show the full amount per the EMP 201. So you have to manually adjust this to put in the reduced figure. So again, if you're using e-filing to make your payment, make sure you manually adjust the figure that you need to pay. Okay, to the reduced figure. Okay, so that was the amendments that has come about from SARS. We're now going to look at some of the new tax relief measures that has come across. The first one is on skills development levy. So I just want to touch a little bit on what is skills development levy. So this was introduced in 1998, and the aim was to improve the skills and productivity of the South African workforce. And who has to pay SDL? So a lot of times organizations are not aware whether they need to pay SDL or not. So the legislation states that every employer that's registered with SARS for PAYE and has an annual payroll cost in excess of 500,000 Rand, so that's roughly 41,000 per month, you have to register for SDL. Okay, so that's just a little bit of what SDL is. And then how is SDL computed? It's 1% of your monthly payroll cost. And then how do you pay over SDL? So SDL gets declared on your monthly EMP 201, and you pay it over to SARS by the 7th of the following month. So it basically goes on your normal employee taxes that you're paying. Okay. What is the relief that has been provided by SARS? So SARS has basically now said that they are providing a payment holiday for all taxpayers. So very important, it's all taxpayers, and it's effective from 1st of May 2020 to the 31st of August 2020. So do you need to apply for this SDL holiday? No, you don't, because it's applicable to every single taxpayer who pays SDL. Okay, so effective date, remember, is from 1 May 2020 to 31st of August. So when you submitted your April EMP 201, you would have still paid over SDL to SARS. Okay, important or practical considerations that you need to ensure is, if you are using an automated software, again, make sure that the software update has been done to exclude SDL. The reason I say this is that if it's still included in your payroll, when you're doing your EMP 201, obviously you're going to exclude that, but then you're going to have an issue when you're doing your EMP 501 recons at the end of the year or in the 6 months, so the 2 501 recons that have to be done. So very important thing is to just make sure that if you are using an automated software, that the update has been done to exclude SDL from May. When you are submitting your EMP 201 for the months May to August 2020, very important, do not declare any SDL on the EMP 201. So that SDL block will not be grayed out. It will still be the same as per normal if you are an SDL contributor. So very important thing is, do not declare anything on the EMP 201. Okay. So that was the SDL. So just to repeat what it was, basically it's a payment holiday 4 months, applicable to all taxpayers. Okay, the other new amendment that's come across from SARS is that they basically now for VAT allowing entities to change their category as a way of fast-tracking refunds. So SARS is now allowing Category A and Category B VAT vendors to submit their VAT returns on a monthly basis as opposed to bi-monthly. So this concession is available to all VAT vendors, and the reason behind it is that they're trying to stimulate cash flow by fast-tracking refunds, and the change in the VAT period is only for 4 months. So very important with all these amendments that have come about from SARS is just to keep in mind that there is a time period in place for them. So you obviously want to make sure that you know what the time frame is and that you are adhering to that. So I just wanted to touch on what exactly is, or who exactly is a Category A vendor and who's exactly a Category B vendor, because often you're doing your returns, but you know it's not something you know offhand whether you're an A or a B. So your Category A vendors, you are required to submit one return every 2 calendar months for the tax periods ending on the last day of Jan, March, May, July, September, and November. So those are your odd months. And your actual 2-month submissions are done in February, April, June, August, October, and December. Your Category B vendors are required to submit one return every 2 calendar months for the tax periods ending on the last day of Feb, April, June, August, October, and December, which is your even months. And your 201s are actually done in January, March, May, July, September, and November. So it's very important to know which category you are, because the way you claim your monthly over the next 4 months is slightly different between the two. And I'm just going to cover how so. So if you are a Category A vendor, so you are now permitted. So remember, it's up to the organization to decide if they want to take up this relief measure. It's not mandatory. So you are permitted to file monthly returns for the April and May tax periods and your June and July tax period, should you choose to do so. So basically you'll have 4 months, April, May, June, and July. Your Category B vendors, you are permitted to file monthly returns for May and June tax periods and July 2020 tax period. Now, should you choose to do so, you would then also have to do a monthly return for August 2020 so that you can get back to your bi-monthly return cycle. So the only difference between the A and B, so A vendors, you will do April to July 4 monthly returns. Category B vendors will basically be doing from May to August 4-month returns. Okay. Just some, okay, so that was basically the new relief measures from SARS. We wanted to cover as well some of the practical issues that has come about from the TERS submissions. We've been doing submissions for quite a few clients. After the last webinar, we had a few organizations contact us to assist them with their submissions. And I've just decided to cover some of the common errors that have been made during submission. The first one is that not all employees have been registered for UIF. So the Department of Labor basically has no record of the employee working for your organization, and they're rejecting claims because of that. Second one, and I'm going to touch on that in a little bit more detail just now. The second practical issue that a lot of, and I think this is where most organizations are falling short, is the CSV file that's being uploaded is not being completed in the correct format. So the Department of Labor has issued guidance on how to complete the CSV file and how to convert it. But a lot of people are getting things wrong in there, like the format of certain numbers or the format of information is not correct. And if the data is not submitted correctly, then they reject your claim. So the other one that we've seen is that where people have been place their employees on paid leave, when they're submitting their TERS claim, in the column remuneration received during shutdown period, people have actually put in the full salary that they've paid the individual. However, we've received guidance from SAICA and from the Department of Labor that this amount should be nil. If you include a figure in there, so say for example, the employee was getting paid 10,000 Rand and they were on paid leave for the month, and you included 10,000 Rand in that column, remuneration received during shutdown period, the Department of Labor won't pay you anything for that employee because you've made a salary payment. So important thing is, if you are putting people on paid leave, you have to show that the remuneration is null. The other one is incorrect UIF number has been used. So a lot of people are using their SARS number as opposed to the Department of Labor number. Okay, so some tips that we have to assist with submission. So if you don't have many employees, you can capture each employee individually rather than uploading the CSV file. So because the CSV file is the thing that's causing a lot of people grief with the submission, if you've got few people, there is an option on the Department of Labor site where you're doing the application to rather do a manual submission for each and every employee. That way, obviously, you'll make less mistakes. If we found this personally, that during the day, the system hangs quite a bit with, I think a lot of organizations or a lot of people are on and trying to do their submissions. We found that if it's hanging or slow during the day, then we've actually done our submissions after hours and we've had no issues with that. So if you do have that option, that's something to consider. Another important tip is that you have to do a submission for each month that you wish to claim. So it's not that you can do one claim for a number of months. So for every single month that you want to claim, you have to do a separate submission to the Department of Labor. There's no submission deadlines in place, so you can still claim for April, even after the 30th of April 2020. So we're in May now, so if you haven't done your submission for April as yet, you can still go ahead and do that. Another one is to ensure that all your employees have been registered with the Department of Labor. So this was my first common error that we found, is that the Department of Labor is rejecting claims because they're saying that the individual employee is not showing as being registered on their side. So what you need to make sure is that do you have a U-filing account? And two is, have all your employees been registered on U-filing? We're going to touch on what is U-filing, because we found that not a lot of people know that U-filing exists, and they don't actually know what needs to be done. So we're going to go through that as well. Okay, so what is U-filing? U-filing is an online portal that's been created by the Department of Labor, which requires employers to register all their employees under their profile. Your registered employers are required to submit a monthly U-filing return, which shows the Department of Labor which employees you are paying UIF for. Enabling UIF, or well, U-filing basically, it allows the Department of Labor to have a full list of every employee that has been contributed for. So your payment will still run through via SARS as per normal. The reason they do this is that because when you submit an EMP 201 to SARS and you make that UIF payment, you're making one payment for your entire organization, right? So SARS just has that one document. SARS takes the money, pays it over to the Department of Labor and says, this is the contribution for this company. However, the Department of Labor doesn't know now, okay, this 1,000 Rand that I got from ABC Pty Limited, who does it relate to? So that was why you now have to do your U-filing returns, where you basically are saying, okay, these are my employees, this is when they started working for me, this is their salary, and this is the UIF for them. To register for U-filing, you can visit www.ufiling.co.za. It does allow you to do like a batch import, so you don't have to add each employee individually. Again, it has certain a CSV template document that has to be completed, but they're usually quite simple to fill out. So that is what U-filing is. Just what to expect after you've submitted your claim. So you should get a confirmation email once your claim has been submitted stating if the application was successful or not. If it is successful, if you get the email saying it's successful, it usually says that payment will be made within 10 days. You can also follow up on the status of your claim online. There is, I will show you now on the screen where you can click, but there is a status tab which shows you where you are in the process. And then you will also receive an email, a letter will be emailed, which they will confirm whether the claim has been accepted or not. And an important thing to note here is that you can receive a payment for some employees only, not for all. We've seen that where the Department of Labor pays out only for those employees that are registered. And then on the letter, they will tell you, okay, we've only paid out for registered employees. This is the steps you need to take for the other employees. The turnaround time is generally 10 days for payment and or feedback from them. Okay, like I was saying earlier, you can actually go onto your account and you'll see that there's a few tabs on your screen. One of them is the status. So this was a status that was processed. The payment was received from the Department of Labor. So you can always just check the status of your account. Okay, and then what to expect after submission. So like I mentioned earlier, there will be a letter that will be emailed through to you confirming whether the claim has been accepted or not. And I did mention that the payment can be received for certain employees. I've also put up contact details for the Department of Labor. We've actually found them quite helpful. You can email your queries through to COVID-19 TERS support@labor.gov.za, or you could actually call the call center. And unlike previously, they actually do answer the calls now. So we actually have had quite a good success rate with phoning into the call center for queries that we've had. So obviously it's a learning process as you go along with the TERS claims. I just want to touch on one thing that it's not on my slides, but just something that there's a common misconception out there about what the TERS claims are for and who can claim it and what you should be doing with the money. I think we've mentioned in our last webinar that you should only be claiming TERS if you are unable to pay your employees, or you're short paying them, or you put them on paid leave. The benefit of TERS is not for the employer, it's for the employee itself, because the government wants to prevent the residents of our country from being unemployed, which was why they implemented the scheme. And the last thing is that the money that's being received, I think you have seen in the news recently that employees have been complaining that their employers are getting paid out, but not paying the money over to them. So very important, the money that you get from the Department of Labor for your TERS submission, it has to be paid over to your employees. They have said that they will conduct audits. We're not too sure, obviously, how they will select or who they will select, but they have said that they can conduct an audit on an organization to see that once the money has been received, you have actually paid it over to your employees and not retained it. The only time you can retain the money is obviously if you put people on the paid leave option. Okay, so that was just the practical guidance on the TERS. So how can TPC assist you with your TERS claim? We covered this in our last webinar, but I said, okay, I'm just gonna bring it up again if we have any new participants today. So for our existing payroll clients, we will do your submission at no additional cost, and we'll obviously perform the follow-up for you. For non-TPC clients, we can review your documentation prior to submission at a charge of 50 Rand per employee. Where our other service that we can do for a non-TPC client is where we can prepare everything for you. So we can prepare all the documents. We will do the online submission and do the follow-up with the Department of Labor. And our charge is 100 Rand per employee. In terms of your TERS submission issues, how can we assist you? So if you've already done a submission, we can contact the Department of Labor to follow up on your submission at no charge. So that we can come on and just do a first call for you to see, okay, what is actually going on with your claim? And then obviously, if there is further assistance that's required, then we can agree on a fee prior to commencing with any work. If you are not registered with U-Filing, so we can assist with the registration and upload all the employee information at a cost of 100 Rand per employee. Okay. In terms of your ETI claims, how can TPC assist you with your ETI claims? Again, for existing payroll clients, there's no additional cost. We will perform the computation. We will complete your EMP 201 and ensure that the correct thresholds are applied. For non-TPC clients, we can review your ETI computation to ensure that the correct thresholds have been applied. Our fee charge is 100 Rand per employee. And we can also perform your ETI computation for you at a charge of 150 Rand per employee. Okay, and then now just on some additional tax relief. So this is also new, that's come about from SARS. They're basically allowing for large businesses and some smaller businesses, if you are not in a position to make your SARS payments, they're allowing you to apply to SARS for a deferral on your payments to them without incurring any penalties. So basically, they've covered two areas. For larger businesses, which has a gross income of more than 100 million, that's incapable of making payment due to the COVID-19 disaster, you may apply to defer tax payments without incurring penalties. And then similarly, if your gross income is less than 100 million, you can also apply for a deferral of payments without any penalties. So this is something that I think a lot of organizations can take up on. So you can contact us for assistance with the above application to SARS. There's obviously some qualifying requirements that they have, and there's certain information that has to be submitted with the application. So if this is something you think will be of benefit to your organization, please just send me an email and we can be in contact with you. Okay. Other tax matters that have come about from a personal income tax perspective. So SARS has stated that they will be doing auto assessments this year. So it's an automatic assessment will be generated for many taxpayers during the period 1st of June to the 31st of August. And then individuals will be given an opportunity to accept the assessment that's been raised by SARS or to query it. They've also now said that individuals who are non-provisional taxpayers, so these are your normal employees, or they have not accepted the outcome of an auto assessment, you are required to file from the 1st of September through to the 16th of November 2020, and encouraging everybody to file using e-filing because obviously they're trying to reduce the amount of face-to-face contact. Individuals who are non-provisional taxpayers who make use of the SARS branch facility, they have until the 22nd of October 2020 to file. And then for provisional taxpayers who have not accepted the outcome of an auto assessment, you are required to file when they are ready, but not later than 31st of Jan. So that hasn't changed. Your provisional taxpayers usually always had until the 31st of January to file your income tax return. Okay. So just a little bit on who we are. For those of you who haven't engaged with us previously, or this is the first webinar you're sitting on, we basically a team of CAs. We specialize in the NPO sector. We've got a combined experience of 45 years in the NPO sector. And we are one of the largest service providers for the NPO sector itself. Our vision is to ensure that we continue being recognized as the leading provider of audit, accounting, and tax services for the NPO sector. And obviously, we're always trying to develop new value-added solutions to the nonprofit sector itself. Our promise to you is obviously we want to provide you value for money for the services that we're delivering. Deliver what we promise to you, and at the same time be passionate about serving you and your organization. And these are basically our service lines. It's very typical to most accounting firms where we have an accounting function, we have audit and tax, but obviously we are geared towards the NPO sector. So if we look at incorporation, we assist lots of organizations, or many organizations, with the formation of their nonprofit, basically guiding them in terms of what structure to take. We assist with the registrations with SARS, with the Department of Social Development. Also just reviewing your founding documents, especially for new clients, reviewing it to ensure that it's fully compliant with all SARS requirements, all the DSD requirements if you are registered with DSD. From an accounting perspective, we offer full accounting services. Like I mentioned in our CA Connect video that was playing in the beginning, we actually have tailor-made packages for the NPO sector. Again, just to highlight, it's a premium plan and an essential plan. And as part of our accounting services, we cover normal bookkeeping, financial statements, payroll services. And then under your audit, so besides the normal statutory financial audits, we also look at funding and donor audits. Obviously, a lot of the nonprofits have donor audits requirements, so we do assist with those. And we do a lot of training, seminars, and workshops. As you can see now with lockdown happening, we can't roll out our usual training where we usually go around the country. So we're actually going to be bringing a few more webinars to you guys over the next few weeks. And then we offer tax services. So normal compliance, income tax compliance, and PAYE work, and then obviously ETI. Okay, just in terms of access to our webinar recording and slides, we will be posting it up on our YouTube channel. So if you missed the last webinar as well, those slides are up there on our channel. We will be uploading this as well with the recording. And yeah, and we're going to take our questions now. Oh, just before we go to questions, very important thing is the disclaimer. So the information that we've disseminated today is obviously correct as at 11th of May 2020. I think we've been putting this in all the time because the information has been changing so drastically since lockdown commenced and the legislation that's come out by SARS. You obviously have seen now today information that we gave you on the 24th of April has now changed. So very important is always make sure that you're working with the most up-to-date information. If you have any queries, and you're not too sure whether something is still applicable, you're more than welcome to email me or give me a call. My contact details are up on the slide, and the slides will obviously be put up onto our YouTube channel. So my email address is there and my cell number. Obviously we are not, we're still working remotely, so we haven't put our office numbers up there. Okay, so we're gonna take questions now. Okay, so I'm just going to go through the questions that have come through thus far. Okay, so the first question that we've got was, does a payment holiday mean that there will be no back pay i.e. retrospective payment after the lockdown period. Okay, so I think somebody has responded to that, but I'm just going to touch on that. So the SDL payment period, yes, there is no back pay, so it's a payment holiday. So for those 4 months from May, June, July, August, you will not have to pay any SDL. Okay. Do you have to put a termination date on the CSV file if on paid leave? I don't think so. I don't think you actually have to do that. How can I get a tax exemption letter for an NPO? So, okay, I'm not sure whether you mean your tax clearance, or tax exemption would only be if you are a PBO and you are tax exempt entity already. You'd have to contact the tax exemption unit to get a copy of your tax exemption letter, but I'm not too sure whether that's what you're referring to. So if I haven't answered that question, can the person just maybe repost afterwards? The next question: after paying UIF to SARS on the EMP 201, do you still need to register each employee in DOL? Yes. So what I was saying earlier is that the EMP 201 submission is merely just a submission for the payment. So the SARS will basically pay your amount over to the Department of Labor. You as an organization will still need to register your employees with the Department of Labor itself. So you have to do both. Is there relief for staff not paid in full? So I'm assuming this is a TERS question. Yes, so you can claim for the temporary employer relief scheme through the Department of Labor if you are part paying your employees. So remember the requirements are either you're not making any salary payment, or you are making a part salary payment, or you have asked your staff to go on paid leave. Okay. 2 questions. I have tried to apply to TERS last week. I hadn't applied for previous months, but I saw that submissions for May is not yet open. Do you know when it will be open? I'm not too sure when it will be opened. I'm assuming probably this week. It should open, or early next week. We've also just watching the site to see when the applications will be open. Okay. If you paid employees in full for April, can you apply in May for relief for previous month's payroll? So again, I'm not too sure if I understand the question. If you paid your employees in full during April, so for April, you could not have claimed from the Department of Labor because you've made full payment. You can apply in May for May's salary, so not for previous months. So April, if you've paid them, April is gone. You cannot do any submission for April, but you can do a submission for May if you are part paying them, or putting them on paid leave, or not paying them at all. Okay, next question. If we were registered for U-filing, but have not been submitting monthly returns, should we go back now and submit older returns? If so, how far back? On that one, I'm not too sure how far back you would need to go. If you could just email me, and then we could just respond to you via email on that one. I think you are going to have to submit the older returns, but I'm not too sure how far back you would need to go. We'd have to check that for you. Okay, that's the same question. I'm having trouble registering on the U-filing webpage. It does not have a drop-down for NPO or PBO, only companies, CCs, etc. Okay, we haven't had that option. We haven't had that issue because we do have trusts that are registered and voluntary associations. So maybe, yeah, just send me an email as well and we can see what we can do, because we haven't had that issue on our side while registering organizations. If you receive a subsidy amount for some employees, can you still claim from UIF? So I'm assuming, so that subsidy is like their salary and you're paying it over to them, then I don't think you would be able to claim, because the whole point of this is that you can only claim if you're not making any payment or you're making a part payment to your employees. So if they're getting their money as per normal, I would think you wouldn't be able to claim. If plus minus 20% of your income is from trade, do you qualify for PAYE deferral? So I think you wouldn't, because 80%, so your other income would be more than that 20% requirement. Do you have to submit proof of payment to UIF? No, you don't. If you're paying through SARS, you don't need to submit any proof of payment to them. Is the amount UIF pays out taxable? No. So the amount that you receive as the employer, which you will pay over to the employee, it's not considered taxable in the employer's hands because you're acting merely as an agent. And in the employee's hands, it's also not taxable because normal UIF claims is not subject to tax. Okay, would you please send us the first slide? Okay, so we will be launching the different packages. We will put that up on our YouTube channel as well. I think we had a request to just send that slides through. Okay, do we still need to register new filing if we send a declaration each month via our payroll software to the Department of Labor? We always get a no errors found reply, so we can take it. Yes, so I would agree with you that if you are submitting your reports to them on a monthly basis, then you shouldn't need to register on new filing because they usually would tell you if there's any error. What is the timeline for the submission of ETI claims? Can it be backdated? With ETI claims, you can only backdate for 6 months. But if you haven't claimed for an individual that qualified and you've never done any claim for them, you can start claiming today and go forward for their 24 months. We've actually found that out from SARS because we've had a few organizations that was not aware of ETI, and after the last webinar, they now contacted us and quite a few of their employees qualify. So you can't now go back and try and claim 24 months, but you can claim going forward. The backdating, I think, is only a maximum of 6 months. When will TERS application for May open? We're expecting it would be opening sometime this week or early next week. We haven't been given a date as yet. I applied for TERS in April for all employees and submitted the CSV file. I have received confirmation and payment for only one employee. The file on their website for the declined employees has no info, and therefore I cannot see why it was declined. Okay, so on this, you should have received an email with the letter attached as to why the employees were declined. I mean, all we have seen the files, they usually have an error code column, but you can also just contact the Department of Labor to see what has happened, or you could contact us and we can assist with that. Next question. If staff received a reduced salary and have exhausted paid leave, does the employer fill in reduced salary amounts in TERS application or no? So if you are paying them a reduced salary, then that's what you would put in. You wouldn't put no. So say, for example, somebody earns 10,000 Rand a month normally, and you are now only paying them 5,000. So you would disclose on the CSV file that the remuneration for the lockdown period is 5,000. How do you obtain an essential services certificate for a trust, county plan, BIS portal? Okay, so that's correct. So BIS portal only is applicable for companies and closed corporations. For a trust, there's no formal application. We have seen organizations going through to COCTA and getting some sort of a document from them to say that they can operate. We've also seen some organizations do like an affidavit and they've been operating, but there's no, you're right, you cannot apply on BIS portal. Okay. How long can we put them on paid leave for? If staff usually get 21 days, can we give them more days or not? Okay, so that would be up to you. So if you're giving somebody more than the 21 days, that means that they're going into negative leave. So you could do that. It would just mean that in the future, they would actually owe you more days back. Okay, can you clarify the 750 ETI claim? What is that? Okay, so the 750 Rand is an additional claim that they've allowed for these 4 months. The first part is that if the employee is between the age of 30 and 65, so these employees would never have qualified for ETI in the past because the original requirement or the normal requirement for ETI is that the person must be up to the age of 29, between the ages of 18 and 29 years old. So for those individuals that were above the age category, but met the requirement of being South African, met the requirement of the salary being below 6,500 Rand, you would not have claimed for them previously. So SARS is now saying, okay, you can now claim 750 Rand a month for these employees, well, up to a maximum of 750 Rand a month. They've also now said for those employees where you've already fully claimed for their 24-month period, so you've claimed the first 12 months and you've claimed the second 12 months, and they're still employed for your organization beyond that period, SARS is now saying, okay, for these individuals, you can also claim for this 4-month period an additional claim of 750 Rand. Again, it's a maximum of 750. There is a formula that goes in place depending on what the person's salary is. Okay, we applied for TERS for April for employees, hoping to top up the difference. An employee was declined and we therefore paid him his full salary in April today. We received a payment from TERS for the employee. How do we process this as the April payroll is now done? Okay, so there's 2 parts to this. The first part I want to touch on is the way you'll have done the claim. So y'all did a claim, and then you are going to top off, which is not how TERS is supposed to be done. The idea behind TERS is you have to decide how much can you afford to pay, and then you claim from the Department of Labor for the balance. So that's the first part. Now the second part is, so you'll basically paid him his salary in April, and you'll received a payment from TERS for the same employee. So I would think that, see, the money that you've received is supposed to go to him. So maybe then in May, you'll use that towards that. And so April would be as normal. He's gone through your payroll. You would have submitted your EMP2 based on your payroll reports. And now in May, maybe that money you've received from the Department of Labor, you're going to use that towards the employee, and that wouldn't hit your payroll. The TERS amounts that you receive is not considered a payroll cost for an organization. So it's not part of your payroll run. Okay, next question. When submitting an EMP201 via SARS e-filing, number 1, how do I subtract the 35% PAYE holding? So like I said earlier, your EMP201 does not change if you're applying for the deferral. So you will submit the EMP201 as per normal, which means you will submit the full PAYE cost, the full UIF cost. I will leave SDL for now. Okay, so your next question actually talks about SDL. So just say you're doing your May EMP201, you will submit the full PAYE as per your payroll reports, the full UIF as per your payroll reports, and you will put 0 SDL on your return. That figure will be your total employee taxes that's due for the month of May. You won't do the 35% adjustment on the EMP201. That 35% adjustment is only done by you when you're making your payment, right? So it's only when you do the payment part which you will pay, basically you'll keep back 35% and pay 65%. And then your EMPSA will show that you've got a COVID-19 relief. But very important, make sure that you are qualifying for the PAYE deferral before you are doing the reduced payment to SARS. Otherwise, you will be in charge with interest and levies. I'm not too sure if there's any more questions. That was the last of the question that we received. If you have any more questions, please could you just send them through now. And if there's if the questions that I have addressed, if you still have some queries or questions on it after that, you can just drop me an email. Okay, we've got a question. Can we claim the additional ETI for employees who have been employed by us for many years but earn less than the 6,500? Okay, so you can claim the 6,500, but they must have been employed after 1st of October 2013. That was one of the other requirements. So your ETI requirements is there's an age requirement. They must be between 18 and 29. There's a nationality requirement. They must be South African. There is a salary requirement. They must be earning below 6,500 Rand. So it's not 6.5, it must be below 6.5. And the last requirement is the date of employment. It must be after the 1st of October 2013. So if they meet those requirements, then you can claim. Okay, so I've just got a question again to say, having been paid in full and received the TERS payment. So what I was saying with that is that since this is my understanding, you've claimed and you've paid the full salary. So your April for payroll, you won't do anything for that because you paid the person through your payroll. The money that you've received from the Department of Labor, I would use that as a May payment to that employee. But then you won't have a payroll cost for that person in May. I hope that addresses your question. I'm not too sure if there's any more questions. Okay, so if there aren't any more questions, I just want to say thank you to everybody for taking the time to join our webinar this morning. I hope it was informative. And if I haven't addressed your questions okay, sorry, I have one more question. So let me just go back to that. Okay, so if we haven't claimed ETI for previous years and we qualified, we just start claiming for the previous periods from now. That is the guidance that we've received from SARS, where they're saying you can claim from now. So you're starting from month 1 now. So that is the guidance we've received. Okay. So we've got another one. We were informed we can pay our staff while waiting for the TERS payment. Okay, so technically that's not correct because you should only have been paying your staff with the money that you receive from the Department of Labor. If you had the money to make the salary payment, that means that you actually didn't qualify for TERS in the first place. So I know a lot of people are doing that. They are paying their staff and then they're getting the TERS money and then they're retaining it. But the Department of Labor, one of the requirements is that there has to be a transfer of the money from the employer to the employee. So if you are, and remember I said they can come and do an audit on you. So if they've paid you and you've already paid the staff, so now you're sitting with the money, you've basically been reimbursed a portion of their salary. You could be found, I don't know what the penalties are from the Department of Labor side in terms of the audit, but they've pretty much said categorically, the money that you receive cannot be retained by you. So in your case where you've paid and you're waiting for the Department of Labor, technically that should not have happened. You should never be paying and then waiting for the claim. You should be telling your employees that we are not in a position to make payment for the salaries. We're submitting a claim to the Department of Labor. There might be a delay within which payment will come through. I mean, we've had some cases where you submit the application and the money is received within 2 days, but we've had some for 10 days. So yeah, on that, I'm not too sure who advised you to pay and then claim. We've got another one. We paid the staff member the TERS UIF claim amount, and I know I need to send them a proof of payment. Where do I submit this to? So they haven't asked for proof of payment from what we've seen. But what I would suggest is maybe just keep a record of those payments. So maybe just do a PDF of your bank statement and highlight, you know, the money coming in, the money going out, and just keep that on record. So if you do actually get asked to provide the information, you have it. Okay, we've got another question on TERS. Can you set up payment directly to your staff as opposed to the company? Are there any implications thereof? So you can set up the payment directly to your staff. So on the CSV form, it does actually show you, you'd have to disclose bank account details. So you can put your staff one in there. I just think it's easier if it comes through the organization, because then you as the organization, you know exactly how much you receive for everybody, and you can then facilitate the payments to your employees, but you can actually include their details. Okay, let's say you didn't pay overheads on time, so you have enough to pay the employee first, and knowing that TERS will come later and pay the overheads, then will that be a problem? Yes, that will be a problem, because again, one of the requirements is that the money cannot be used for anything else besides paying employees. So the Department of Labor has even gone to the extent of saying that if you are in an overdraft, the bank is not allowed to even utilize or withhold that money against the overdraft. So you're not allowed to use this money to pay your overheads. I mean, they've said that they can do audits. So according to what you cannot go ahead and retain the money and then use it for other payments. I just wanted to, there was a question earlier for backdating the declaration. I've just got some clarity. You can go up to 3 months. So for your U-filing, I think one of the participants want to know how far back do we need to go, and you can go to 3 months on that. Okay, not too sure if there's any other questions. Okay, so if there's no more questions, okay, I just want to cover one more thing just on the declaration for the U-filing. So where you backdate for the 3 months, you would just need to declare for the last 3 months, and then you print the declaration, and then you submit that with the proof of payment to ensure that your employees are actually on the Department of Labor system. Okay. Okay, so I don't think there are any more questions coming through. So thank you for taking the time out to attend our webinar. I hope it was informative and we've addressed your questions. If you're still unsure about something, you can always just email me. The recording and the slides will be put up on our YouTube page. You can go over to that and get access to today's recording and the recording from the 24th of April. Yeah, and you're always more than welcome to send me an email to see how we can best assist you. Thank you very much. Hope everybody stays safe, and until our next webinar. Bye.